What's good, everybody? Deontay Mary here again with another video. Um, just wanted to go through GJ. I am on H4, and the only thing that I am doing, so you see, I did some back testing. Only thing that I was doing is saying if these odd flats is working. As you see to the side, we have 5000, 7000, 900, 100. 300, 500, 700. And all I did was go back and see, are these levels getting hit? So I'm on H4. And as you see, every week, these odd flats are getting hit. So like something like this, you see it pushed from up here. Hold on. See it pushed from up here all the way down. Let's see how many pips that is. Should be a total of 2,000, about 2,000 pips. Last week on GJ, we had a push from 3 to 5. You see, 3 to 5. Each week, it looks like it's pushing. This one, it actually pushed all the way down here for 4,000 pips, right? This one came close up here. Boom, actually pushed for 4,000 pips on G, about 4,000. So yeah, about 4,000. So all I wanted to show you guys is that these odd flats are being hit each week on H4 when it comes to trading a Forex pair as well. Now I can show you some more. It's getting hit every week. So this one it pushed off here all the way to there. Actually pushed for 4,000 pips. See, retest, broke off, retest, pushed all the way up, came all the way up, dropped. So yes, you can try to enter at some of these, odd flats like here, selling, boom, or like here, came back, retested, took the buy. Here, hit the 300, take it. Or what I was seeing and why I have these pink highlights is because if you draw the fib from level to level each week before the week start, if you draw the fib, so something like this, boom. If you draw the fib before the start of each week, so this will be the last candlestick of the last week. So I normally, if I'm trading this Forex pair, which is GJ, you don't really want to trade until probably London time, which is this inside this 8 o'clock candle on H4. 8 o'clock, it says 8 o'clock down here, but I think that's 1 o'clock AM Eastern time here in Indianapolis. So yeah, so it'll be 1 AM here Eastern, 2 o'clock, 3 o'clock, and then 4 o'clock, all within this candlestick. Then the next H4 candle would be the 12 o'clock, which is the start of that 5 o'clock AM Eastern time. So we know that the British pound is basically, it moves a lot during London. So we basically will want to look for our trade inside this 8 o'clock. So before this week even start, I would tell myself, as far as looking at which level will get hit. We broke above during the end of last week. We broke above the 300 level. So I would be either looking for a retest back to here, which it did, or I know that this powerful 23s, this 23s be powerful. This whole level right here is a powerful level. So I'll be looking to take a buy from here to what level? This level. Why? Because we just broke above this one, especially looking at the previous H4 candles to see how we retested it. So my true entry would want to be once it start to break above this 23. And it's during the time of London, which is 3 AM, 2 o'clock AM in the morning here in Eastern. So I would be on the charts looking to take this buy, possibly hold it, just like I explained on that US 30 them 500 levels. All I'm doing is just finding how to hold trades on Forex pair, which is GJ. So when the 8 o'clock candlestick, which is basically 1 a.m. Eastern time, is starting, I clearly see that we broke above the 300 level, came back and retested it inside of that 4 o'clock candlestick, right? Boom. Now, once this 8 o'clock candlestick is happening, starting to occur, I'll be looking to take this buy because I already know that it pushes from one level to one level. And from bias, my overall bias will be from, the 300 level to 500 level, right? Boom. I wouldn't be looking to take a sell. I would know that we have to pull back first before we can overall take that big sell, right? So this will be the entry for this trade. This 300 level, looking to take a buy. How I would enter, especially on a funded account. I have my stop loss for about 200 pips. So 200 pips, which didn't get hit. And what I would do is place a 10 lot. So I place a 10 lot here, boom, put my stop loss for 200 pips. That means I am now risking $2,000, right? Each stop loss is going to be at 200 pips. And if I'm using a 10 lot, I'm now risking $2,000, 10 times 200. Let me see, make sure that's just doing this math right. Yeah, so it'll be 10 times 200, which is that 2,000 that we're basically looking for. As far as the stop loss, you don't have to use a 10 lot, right? Only reason I would want to use a 10 lot is because I feel confident in my entries. First of all, I feel confident in my entries. Um, most of you guys that I do help every week, most of you guys are on funded accounts. A lot of you guys have 200K accounts, and then a few have the 100K account. But if I'm on a 200K account and risking $2,000, right? My daily limit is 10,000. So that means I still have 5 more chances to take this type of trade, only using a 10 lot, right? Boom. 10 lot goes there. Stop loss goes for 200 pips, which is risking 2,000 of that 10 from the daily. Look at the TP though. The TP is great because it pushed for 1,519. And if you take that times 10, it'll be around 15,000. So 10 times 1,500 basically, which gives you that $15,000, just risking 2,000 using a 10 line. For somebody that's on, a smaller account or a live account, you could take the same trade using a 1 lot, placing it for 200 pips, which would be $200 to gain $1,500. That's still a great win. Even though, we're using smaller numbers, that's still a great win, right? Boom. Let's look at the ones before, but this is my overall mindset. So when you see this pink, all it is just that 200 stop loss if I was to place the trade at the 23. A lot of these trades that I'm going to show you would be at the 23 because we know that these 23s are powerful. All I'm doing is finding a bias as far as odd flats. It's either I'm going to go, or it's because we are already floating around this 300 level. It's either we going back to this 100 level at the bottom, or we're going to this 500 level. Drawing the Fibonacci doesn't matter anymore because now we know the 23 and the 76 is the same area. My overall bias would be for, especially looking at this, would be to go to this 500 level up here. So when the market start, I don't trade the first 2 hours or the first 2 H4 candlesticks. When it's 8 o'clock, which is basically 1 a.m. Eastern time, I'll be on the charts looking to take his trade. Yes, we are up under the 11 moving average. Like I said, the bias of going to this level first will be still the same. So I'll take the buy. Boom. Using a 10 lot, risking $2,000 to gain $15,000. This is great. I like it. Take it. Let's look at some more. So the bias as far as this one. we clearly see that we're floating somewhere around this 500 level. So my bias would be either to go, hold on, let me see. I didn't mean to do that. My bias would be either to go to 700 level. So my bias for this week even start, my bias would be either go to here or it will be to go down here, right? Boom. I'm thinking since we're above the 500 level, my overall mindset will be to buy to go see the 700 level. So my Fibonacci would go something like this. Boom. And as we know, we don't trade them first 2 hours. So we don't trade in this one and we don't trade in that one. When this H4 candlestick starts, I see clearly that we're around the 23. I'm telling you, when the market is rejected at this 23 or it pushes down and it comes back up and closes above, that 23 is going to send it flying back to the 100 majority of the time, almost every time. You'll see it more when I show you. Like this, I would have took this buy going all the way back up here for another buy, another look like 14,000 pips, which is still $14,000, just risking $2,000, right? Boom. Or it can be if you just want to use one lot, you gain in $1,500, risking $200. Or you can use a 5 lot, and I'm not even going to do the math because you can do 5 times 14. You do the math, but you'd be risking less as far as using that 10 lot. So basically breaking it in half, you'd be risking what? Be risking about $100 to make what? Almost $7,000. It's great. It's still great money that, you know, a job that's not paying you. Let's look at those week before. So we basically floating around this 500 level here. So my bias is to take the buy from there or look for a sell to here. What would you be thinking? We already above the 11 moving average, right? Boom. So I would have automatically took this one off and be like, all right, I know that I'm looking for a buy for this week, going from this 500 level back to the 700 level. We draw the Fibonacci. Since the market closed up under this 500 level, my Fib will be looking like this because we're up under it. Boom. And since we are up under during it started up under as well, but it closed above, went back above. So even if it closed above, I know it has to come back down to retest. And as you see, where did it retest? The 23. Also pulled back to this 11 moving average, which is powerful too. Stop loss go where? 200 pips. So take it at the 23. Stop loss go 200 pips. Using a 10 lot, risking 2,000. TP goes where? Next level. So take the buy here. That's 2,400 pips. Basically using that 10,000. Using that 10 lot. That's $24,000 just by holding one trade. And I like this strategy only because I don't have to try to worry about catching trades up in here no more, especially for this GJ pair. It's not US 30. US 30 is wild. It can wick all the way back up. It like to retest and go crazy. Usually the flow is way more smoother on Forex pairs. So once you take this buy, you can confidently be chilling, waiting for this next 500, this next odd level to get hit. Especially just using 10 lot, risking 2,000 of it to gain 24,000. That's a great trade for myself, especially having an understanding of just knowing that it has to go either to that level and versus going to 300 level. Our bias should all be the same. We're above this 11 moving average. We already know that these odd flats are getting hit every week. Now we just have to focus on getting that proper entry, which is basically them 23s, which I'm showing you guys. I'm giving the stuff that I am showing you guys on this YouTube channel is worth thousands of dollars. I charge 250 for those who do need help. But those traders or gurus, whoever you want to call them, who are mentoring other people, they're charging thousands, sometimes 25,000 just to get on a call with them. 5,000, 10,000. I'm only charging $250. And basically, you don't even have to pay the $250. I'm giving you all the game for free, basically. I only charge for my time because I'm on those calls 2 or 3 hours a day. And then I give you free access afterwards to be able to contact me. But eventually that's going to stop because I make money. Like, yes, I want to see everybody win, but I'd rather just put free content on YouTube and not have to teach. I'm giving you guys the free game. These 23s are powerful when you draw the fib from I flat to I flat. Take it at 23, risk 200 pips. Some cases you'll be able to risk just 100 pips, right? But that's kind of tight. So that's why I put it at 2. Risking, like I said, you could use a 10 lot or use a 1 lot. It's still a great risk to reward because we know that the next level is going to get hit. 10 lot. Now I have $24,000 that I took one trade this week on. Easy. Let's look at this one. This week, where we basically close right here, which is around this 500 level. So my overall mindset is that we're going keep doing it. My mindset before this week even start would be we either going to here or we going down here, right? Boom. From what I see, we floating in the downtrend, right? We up under the 11 moving average. So everything is telling me to take a sell. Now I just have to draw out my fib and see where's a good entry point to take the sell. Because overall, we're up under this 11 moving average. Has some clear big push downside before the market closed. My next projected area would be this 300 level down here, which was hit. Now I just have to lock in and see where can I enter it, right? Another thing that's important that you could do as well is turn on a line chart and go to H4 and see and draw out levels of where to spike. You see how we got a spike here, we got a big push, treat it as resistance, it pushed down and then it broke above, right? So you can put a line on it, or you can sometimes put it above it, but I'm gonna put it on it for this case. So about right there, boom. Now I know when the market opens, it's a good chance we're gonna go back to that resistance. The same area that it was playing resistance at, it's gonna go back to that area. That area is still around the 50, which is a great area, right? It's still a good area. Yes, we would have been looking to take a sell. We like these 23 areas, right? We know that we like the 23 areas, but when the market opened, it opened above the first 2 candlesticks. We don't even trade in between, right? We don't trade in between those 2 H4 candlesticks. So when this 8 o'clock, which is London, opening of London, where did it reject from the 50? We also had some rejection from previous resistance. So everything in the world would have been telling me to take a sell. Even if I don't catch it up here, I'm looking for it to break up under this 30 on a smaller time frame. So as we break it up, it's 38. Once we start to break up under this 38, take the sell, right? Boom. Hold it. 2,700 pips. 10 lot, 27,000 pips. Risking how much? 200 pips, right? If you caught it up here, I think it's on 200 already. Yeah, so 200 pips, boom. And even if you would have caught it as it's breaking up under this 38, it still would have been good, I believe. I'm not gonna go to the small time frames, but you still would have been great taking a sell. Overall, just from understanding of what I just showed you guys, I know that the 50, we already above the 23, so I know I can't take this sell. I know that this 50 area is still a powerful area, right? We also have some rejection in this area. So my overall sell would have been somewhere inside of here anyway, right? Boom. I would have got in, even though, and this is just understanding the market. Yes, it's not in between that H4, 8 o'clock. Yes, this is inside that That 4 o'clock H4 candlestick is, you know, I tell you guys to wait until this one because this is when the most volatility goes on. But let's be smart, bro. Trading is not going to be the same every day. If trading was the same every day, we all would be filthy rich and not have to worry about anything in life. So just be smart. We know that this is a key area. If you turn on the line chart of where it played resistance, got broken through twice, got broken through right here, got broken through again. It has to go back to retest it. That retest area is still our 50 on a fib. We already see that we're up under the 11 moving average. We don't see ourselves going back to the 700 level. So we see ourselves going back down to this 300 level. Why not take the risk there? Even if you do, even if it was to hit your stop loss, right? That's only $2,000 that you lost when you have what, a 200K account. You still have what, $8,000 for your daily limit to get, you know, reached. That's still great. That's still a great amount of room. Even if you're on a 100K account, you only lost 2,000 of the 5,000 that you're still willing to risk. Yes, that next entry would probably be, you know, that lot size would get cut down to probably, you know, 5 just to keep the numbers even or keep them simple. But still, if you can catch this good entry and just let it flow, the reward is so great. That's $30,000 with a 10 lot, risking only 200 pips, which is $2,000. See what I'm saying? I'm gonna just flow through a few more of these, but this is basically what I'm looking at every week. We are playing around the 300, so my eyes would be either go to this 500 level or it would be to sell to this 100 level. I overall believe that we're going up, so like I said, you can draw the fib from top to bottom or bottom to top. My 73, my 76, and 23 is about the same area. So, like I said, you can trade. This is another case when we just been smart. Yes, I tell you to rate. I tell you to wait for this 8 o'clock candlestick, right? But if we're already up under this, playing around this, retesting, playing around this 300 level before the 8 o'clock, why not take the chance there? Risk the 200 pips, never got touched. We know that this is the next key area, 2,000 pips, $20,000 using a 10 lot. And I think this one was done within 1 day. So you still have multiple days to trade, right? Pushed all the way to another level, right? And I'm pretty sure if you just drag this Fibonacci higher, what did it do? Broke above 23. Came back and retest 23. This probably would have hit the stop loss. But it, nope, still would have been good. Well, it came close. Took it at the 20, took it at this 23 again above and let it flow. We already above the 11 moving average. All it's doing is just flowing. So this could have been almost, what was that? If you would have caught it down here to this level, that's 20,000 plus 15,000. Man, too much money. But like, let's say if you just wanted to stay disciplined, right? You didn't take the trade there. We already expecting for it to go to this next level, right? So if you wanted to stay disciplined and only trade during this 8 o'clock, you have to wait for it to start breaking above this 23. And once it break above this 23, take it, let it flow. $15,000. Stop loss goes 200 pips. Still a great trade. Down here, what do we clearly see? We clearly see that we kind of closing around this 100 level. So it's either the market gonna go from here to the 300 level, or we're going back here. I don't see us going back down there. We already broken above this 11, had a retest off the 66. So my overall bias will be to go up. Since we are up under the 100 level, I'll be looking to take a buy. So since I'm looking to take a buy, we already know that the 23 is strong. Market open up here. Let them two candlesticks play out. Yes, you could have took an entry down here, or you could have just waited till this 8 o'clock. This is why sometimes I tell you to wait for 8 o'clock. 8 o'clock, start to push off the 23. Now I could truly just hold this trade for 24,000 pips, risking $2,000. That's still a winning trade. See what I'm saying? Easy. Same stuff every week. Same stuff every week. We see we closing around this 900 level. See that we going to this 100 level, or we going where? Back down here to this 700 level. We don't really think we're gonna go back down here to the 700 level. Why? Because when the market closed, we was already above the 66. We was above the 11. We had some rejection at the level, the 11 twice, 1, 2. So we are already thinking that it's gonna go to this 100 level. So now we just draw out the fib. It doesn't matter if you start from the bottom to the top. I'm gonna start it from the bottom to show you, like I showed you on US 30, using this Fibonacci. This 76 is the same area as my 23. So as I start these first two candlesticks, and this is why I have it down here again. We already know that this 76 and 23. Let me just flip it so I can show you, because I kept drawing it from just a minute ago. I kept drawing it from up here. We already know that this 23 and 76 is this. Hold on, I want to show you, try to get it as accurate as I can. It's the same thing. So this is this pink. This pink line is still on this 23. So as it's pulling back to this 23, I'm already looking to take a buy. As soon as it hit it, boom, risking what, 200 pips. 200 pips was never got touched. Even though, look, this is another case. This has just been smart and been patient. Yes, we are waiting for this 8 o'clock candle. Before this 8 o'clock candle hit, we was already looking. We already know that this 23 is a big, powerful area. So as it came back inside, we taking that buy, risking $2,000 to make 15,000. Right? That's a winning trade again, and holding trades. Right? You could have got back in up here, took a sell right back down. I wouldn't have took that sell because I don't want to risk that much. $15,000 is cool with me. I'm done. I don't have to trade no more. Let's look at this one again. This one probably would have been a tricky one, right? The market closed about, around this, I would say 700, 900 area, right? It's about halfway. Halfway is probably right here. So it's more leaning towards this 900. So my bias would have been either to take a sell from here to there, or it would have been take a, some type of buy from here to there. And this is another reason why it's important. Like I tell you, sometimes wait until that 8 o'clock candlestick start. Because if you go, yes, you could like took a buy, right? Stop loss probably would have got hurt. Probably the stop loss probably would have got hit if you had took the sell. If you had took a sell at this 900 level, right? Stop loss definitely would have got hit, unless you would have just had a great entry somewhere up in here. Well, stop loss would have got hit. I don't want to take that anyway, because why? It's in between those first two H4 candlesticks. I know that London is more powerful. So we already still above this 11. Clearly we push far from the 11. So if anything, we have to come back and retest level. We push hard as hell from this 11 right here. So if anything, I know we have to come back and retest those levels. Another thing, like I said, turn on the line chart. Boom. We see that we broke right here. So since we broke right there, we know we have to basically get some pullback somewhere in this area for us to go to that next area. So don't get me wrong, if I had been patient and stuck to my own bias and rules of just trading inside of this 8 o'clock candlestick, right? I would have clearly seen that we retest this area. And as we retested that area, we came where? Back to the 23, which is the powerful area. Now I can hold this 23 to here for 15,000 pips again, or I can let it fly for 35,000 pips, right? Easy trading. Easy trading, easy trade. It ain't, I don't want to say easy. It's just smart trading. Something like this. This was a losing trade. Why? Because he's already floating down. So if anything, I thought we'd be going down, right? So the Fibonacci, how did I draw it? we understand that we have to retest inside the body, right? Because if this kind of the previous week ended bearish, so we know that this week goes back inside the body and then it continues to go down. So this 8 o'clock, it was just float in between. It didn't even get back to the 23 or anything. So I just marked it as a no trading zone. But eventually we know that we could have been looking to take a sell at this 50. What else do we know? Turn on the line charts, boom. Boom, this is where we broke. This area right here is where we broke. So once the market comes back to it, like I say, sometimes you can draw it up under a little farther, right? Sometimes you can either put it directly on it, or sometimes I will put it just below it, depending on what the wicks look like as well. So once it did hit that area, boom, we also see that we were playing around a 50, take the sell. Because overall, the week before was a selling candle. So we know that the market goes back inside of the body of the selling candle. And then what it does, it has to break lower. It has to break lower because this was the lowest of last week. Oh shoot, hold on. This was the low of last week. So once it goes back inside of the body, creating that lower high, it has to push what? Lower than a previous low. So this area right here, you could have took this out and held it longer or got out back at the lowest last week, or you can just take it back to this 900 level, right? A good sell from the 50 came right back to this 900 level. That's a good sell. So yeah, man, I just wanted to show you guys that video. I don't want to speak all day. Yes, I know this might be a little long, but it's good information, I know, right? Boom. This probably would have been a tricky one because honestly, would have been looking to take a buy. We above the 11, so my bias would have been taking a buy from this 23 to here. So this probably would have been a losing trade. I wouldn't have sold at 38, honestly. I wouldn't. So I'm just being honest with you guys. I probably would have been looking to take a buy at this 23, especially with it broke and stayed above it. The previous candlestick, I would have been trying to take a buy here, which is not a bad buy. It's just wrong direction, honestly. Stop loss didn't get hit. If I took it at that 23, stop loss didn't get hit. Pushed up a little bit, would have got happy, came back down, closed like that. I probably would have tried to jump back in on a sell, but I don't know. This would have been another opportunity here, though, especially right here. Seeing that it didn't push all the way down because we know that these levels are getting hit every week. Seeing that it hasn't on this big bullish candlestick push right here, and see it go back to this 23. Let me delete this fib. Seeing that it went back to this 23 without going all the way down to hit the next level, I probably would have been trying to take another sell entry right here at this 23 as it retested. Boom, this would have been a better trade. But yeah, this first one would have been a loss because I probably would have looked to take a buy here. I'm a little confused, you got. But yeah, that's another one. I'm gonna do a few more just to show you. It's gonna be quick. We clearly see that we are playing around this 500 level. So we are up on an 11 moving average. So my overall bias will be to go back to this 300 level. So now I would just have to play the fib game. Doesn't matter how you draw the fib. We know that this 76 is basically a 23, which is a very powerful level. We wait until what? This 8 o'clock candlestick to start. So when 8 o'clock start to push back, you could take it somewhere right here, or take it even if you would have took it at the 23. The sell at this 76 was basically a 23. Stop loss go for 200 pips. Somewhere in this area. Boom. TP go where next level. So the trade would have been from there to there for how many pips, which is probably 15,000. Yeah, about 15,000. Yes, you could have held it to the $20,000. Get out. Great trade. Got some more going on. Here, my overall bias would have been, since we closed above the 11, my overall bias would have been to go here. Like I said, you can turn on a line chart as well and draw some lines at where higher highs were made. So like right here, boom, higher high, push down, broke above. We haven't came back and retested it, right? So that's this area right here is a powerful area. Like I say, trading Forex pairs is so easier than trading US 30. US 30 just moves a lot. So structure kind of like throws everything off. So yes, it didn't come back to the 23. You see, it didn't come back to the 23, but we see the turn on the line chart from structure. We had higher high, higher low, broke through, creating a new higher high. You can turn on the line chart. So that new higher high was up here. All we did was go back down from this higher high. Hold on. All we did was go back down to retest this higher high area, which is this zone. We already know structure, right? Most of y'all should know. And once it came back to the zone, turn on the line chart and see it took off. We already know that the next key area would be 700. Yes, we didn't get to the 23, but I still would have took my chances here, right? Took a buy at that as soon as it hit, risk in 200 pips, which didn't get touched, putting a 10 lot on there. And I have a 10 lot going for $23,000. So good day. Here's another opportunity. We already see that we are we basically at the 50, so it could have been either way. But what's some more confluence to tell us that it's going up? We closed, when the market closed, it was already above the 11 moving average. So now we just expecting for it just to flow. Yes, you could draw up some trend lines, but overall our bias would be from this level going to this 500 level. So for 300 to 500 level is what we overall looking for when it comes to take the trade. Now we clearly see we're above the 11, so draw up the fib. Boom. Look, we already know that this 70, let me delete this fib. We already know that this 76 or 23 is the same. So we wait them first two candlesticks out. Could have possibly tried to get in at 38, but just wait. What did it do? 8 o'clock open, touch the 23, let it flow. Could have been up for 10,000. Could have possibly tried to get out once you start to see $12,000. I probably would have tried getting out and re-entering, right? Clearly, when we see this break above without it retesting on this next candlestick, it just kept flowing up. I probably would have got out. $12,000, I'm out. Once it came back to retest, waited on more confluence, probably would have been looking to take another buy to this level. Or I could have possibly held it, held it from there to there, 24,000 pips. It's a great day. All right. Stop loss never got touched once you took it at the 23. I'm kind of getting bored with showing you guys this. I just wanted to make a video just showing what's capable of getting done. This probably would have been a scary one because it didn't actually go and push and hit that level. It just kept going back and forth, back and forth. But the entry still would have been great, right? You just would have been flowing in profit for a long period of time. Boom. This is another one too, where the 8 o'clock didn't really give us a good entry of where to take a position as far as buys. Could have possibly, we already know that this 23 is powerful, so you could have took it right there and just let it flow, right? Or it gave us another opportunity later on throughout the week, which was right here. Market came back down to the 23, could have took it again and just let it flow. Still 16,000 pips. Overall, we probably would have been looking to get the full 24,000. Just would have had to held it throughout the weekend, which is something I wouldn't have liked doing anyway. So once you start the flow, especially seeing this double top up here, pushed down and came right back to that area, $17,000 I probably would have been looking to get out. So it's still a great trade. Stop loss number got hit, and all I did was wait on a 23 to get touched. I'm not even going to explain this one because it was tough to try to explain. I mean, I'm gonna just show you. So I have it highlighted because the entry was very important. This is where the market went crazy. I'm gonna just show you this one and then I'm gonna be done. So we waited on the first two candlesticks. Our overall bias would be to go from here going up because we've been flowing up. We're above the 11 moving average. So we probably would have been looking to take a trade here at this 23. When the 8 o'clock candlestick started, yes, it didn't. Let me delete this highlighted. Yes, it didn't come all the way back to this 23, but we do know that this 61.8, it says 38, but if you flip the Fibonacci, it's just going to be the 61.8. 38 and 61.8 is basically the same area. If we're looking for a buy, we know that this is a powerful 61.8, so we could have been looking to take a buy there. But like I say, if we know that this 23 is a powerful area, as it start to break on H1, we honestly could start to look to take a buy there, right? Look at this. So yes, we would have been waiting until 8 o'clock started, which would be this candlestick right here. But we missed the opportunity right here where we could have entered once we broke above, came back down to this 23, taking my chances there. So I have it marked as buy, but it still was great trading opportunities, right? 200 pips, take the buy there. Still would have been a winning trade. TP would have been right here. So about 15,000, 14,000, $15,000 a day. Still a great day. Or like possibly try to look for 8 o'clock started. We know, what else do we know? The market has to go back inside of the body. Let's go to H4. H4 candlestick. Yes, we broke above this 23 and 38. And right here, we know that the market has, this 8 o'clock has to go back inside the body to retest, and then it pushes out and go higher than this previous high. So on H1, just having a great understanding, we have to go back inside of this H4 candlestick, so somewhere inside of here. So yes, 38 couldn't be our good entry. Why? Because we know we have to go a little bit further than 38 to get back inside that body on H4. This was the H4. It closed at the 38. So now we know it has to go back inside the body. So anywhere inside of here, yes, we would have been looking for the 23, but it didn't happen. Turn on the Fib. You also could have done, turn on the line chart. You also could have done something like this. We know we have to go back up under here, right? So once it goes up under here and start to break back above, take the buy, or you could have truly just been lazy with it and wait for it to start to break above this high and just float with the market, take it for lesser pips, but still a winning trade for $10,000, risking 2,000 of it. So yeah, I'm gonna stop here. Just wanted you guys to see that these areas are getting hit every week. Basically odd flats on GJ. It's the same thing for gold as well. It's the same thing for every single Forex pair. I'm telling you, I'm giving you guys free information, free game, free information, risk to reward. You can do it however you want. All you need to know is that these odd flats are getting hit. Now you just have to find the overall direction of which area you want to go. It's either going to be from here, this odd flat that's going to get hit, or this odd flat that's going to get hit. Now you can just draw the fib. Since we think that it's going up, draw the fib out. So from here to there. And like I say, GJ is more of a London pair. So once you start to break above this 23, this was a losing trade. All right, because you would have been waiting on it, wait on 8 o'clock, and as 8 o'clock start to push back up, you would have took the buy. Would have been in profit, good profit. Went all the way up here, but then look, it spiked all the way down, hitting that 200, stop loss. Hit the stop loss. You ain't gonna win every trade. Some trades you're gonna have like this. Hit the stop loss, took you out the trade, and then it actually continued to push in the overall bias that we have from the beginning. So I'm gonna stop right here. Like I said, if you do want to get in contact with me, contact me on my Telegram account. It's at CEO Murr, MURR. Hit me up on there if you have any questions. If you see anything, that I can that you see that you can add to the more Confluence or whatnot. But yeah, I'm just giving out free game for this week. Let me see, do a quick scan. And like I said, I'm not gonna always be right, but majority of the time, these trades using these odd flats are super powerful. So what do we see right now? We floating in between this 300 and 500. We right now above this 11 moving average. We kind of floating in the uptrend. All right. So something like this will be drawn out. As far as bias, I would want it to see, like I said, we only trade during that 8 o'clock. If we could get this next candlestick to break above this 23, which that 23 is around, or price area, which is around 164,500. If we can break above there, I'll be looking for a buy opportunity on that 8 o'clock coming from here, probably going to the next area, which is kind of far when you look in the structure, right? It looked like it would probably reject from an area before it actually get there. But that would probably be my bias. Or if it doesn't, like I said, I would need to see a candlestick close above that 23. If this next candlestick doesn't close above this 23, my overall bias would change. I would be looking to take a sell from this 23, going all the way back down here to this 300 level. So if this next candlestick, H4 candlestick, closes, it can retest, but if it closes up under this 23, I know for sure I'll be looking to take a sell from this 23, going back to this 300 level, or possibly holding it, going back to this 100 level. I don't see this 100 level getting touched like that, because right now we're kind of floating in the uptrend, so I'll just hold it to this level. But yeah, that'll be my overall bias. I'm telling you, this 23, which is 164,500 or 530 area, would be the key area of where I would want to take either a buy or sell. Last week we had a bullish candlestick, so most likely I'll be looking to take a buy. Had some rejection already at the 38. So yeah, basically we'll be trying to take a buy, but I would have to wait on more Confluence on this H4. I would want to see it close above and then probably retest this 23, and then I would take that buy going from here to there, or not just there, but going from there to there. Boom. That'll be my overall bias for this week on GJ. So yeah, I'm gonna end this video, man. You guys be blessed, stay prayed up, and just study and back test it for yourself. And if you have any concerns or questions about anything, hit me up. I'm out.